G'day folks, it's Jim here from AudUsd Forex. It is Tuesday the 16th of June. Well, I thought I'd do a quick technical outlook on a couple of markets, given that we've seen a major turnaround in risk sentiment on Monday, turning from initial deep pessimism during the Asian session over the economic outlook to full risk on mode by the end of the day for no real reason, except that the rule seems to be never to doubt the resourcefulness of the central banks. Monday saw the Fed announcing they would begin an emergency lending program by buying corporate bonds, which it's never done before. So this sent stocks into a stellar reversal higher from their early steep losses, and it also sent the US dollar into reverse after that saw some decent safe haven demand through the first half of the day, but it's ended the day lower. So just quickly, I'll take a look at a couple of markets at the Aussie and the S+P. Although I've got other markets covered on the website, so if you go to audsdforex.com, I think I've got the Euro and the ASX and the oil markets all covered today, and I'll probably put up some more content as the day wears on. Anyway, we're going to have a look at the Aussie to start off with. Right, as you can see, it's called a 10 here in the morning. The Aussie's right out of the blocks, and it's got back above 69.5. And I have to say, the daily price action does suggest that we're probably going to see another test of 70. The short-term indicators, this is a 4-hour chart, they're pointing higher. The hourlies also look very positive. We're back above the 200 and the 100-hour moving averages. So I'll be looking to buy into dips if we see them down there today. But most interesting of all is that the daily charts, let me blow that up a bit. As you can see, the daily charts made a key day bullish reversal, making a newer low and then closing above the previous day's high. And the price action has started off this morning. That's following through on the top side. This bullish reversal does suggest we have got higher levels ahead. So as long as risk sentiment remains positive, as I say, I think probably buying dips towards 69. Looking for a run back to 70 and possibly even back up to this 70.65 level that we saw last week. That seems to be the way of it at the moment. That's about it for the Aussie. As I say, the support really now comes at sort of 69.30. 69 the figure. So I think you play, if you do want to buy the dips, you just place a stop loss pretty tight under 69 the figure. Moving forwards to the US stock markets. Okay, here we've got an hourly chart of the S&P. Now this is yesterday's opening, which was already a gap lower, as you can see, and we headed right down to 29.40, which ties in with the 100-day moving average there. And since then we've seen a really good bounce, and we're now back nearly 3100. We've actually just taking out resistance here. When I wrote on the website just now, 3085 was the resistance. Now we've taken that out, and I think we're probably heading towards back towards 31.5. This here, the 100-hour moving average will prove resistance, but the hourlies and the 4-hour charts both look positive now, and I would suggest that we can probably look for a move back towards this 200-hour moving average, which is at 31.25 or so. The dailies are not looking that positive, and it may be that we just chop around here for a few days, but the weekly charts still look pretty good to me, and I would not be surprised to see another retest of these highs up here, albeit not today, but that's the sort of 32.20, 25 area. I think we can head up there over the next few days. So no, this is just a quick update on how risk markets look. Right now, sentiment is positive. I think we need to be very wary though, in case we do see a lot of new cases of the pandemic and a second wave begin to build. But right now, the high streets seem to be reopening. The politicians are hell-bent on making sure that the economy gets up and running. So while that remains the case, I think you probably need to buy dips on all risk assets. Leave it there for now. Go to the website if you need to look up anything else, and we'll talk to you tomorrow. Cheers, bye.